Hi there, this is the story of Bitfarms. Ticker symbol BITF. Right now the market cap is about 2.9 billion and the price in recent days went up quite a lot to over $5. And the most important question is whether Bitfarms is still a great investment at the current valuation. And the answer, you will find it in this box. During this video, open the box and you'll find the answer here. Now, if you wonder what this company does, well, they are a Bitcoin mining company. And more recently, they pivot to AI and high performance computing. And because of this announcement, plus a surge in the price of Bitcoin, also their price went up a lot. That's why the market cap is over close to $3 billion. Now, let's look at their fundamentals and try to value this company, whether it's a great investment or not. If you look at the revenue over the last 3 years and a half, quite a nice increase. 142 million, 146, 192 million, and for the first half of 25, quite a nice increase. Revenue over $144 million. If they continue this way, they might report close to 300 million in revenue for the full year. And as their growth is expected to continue, yes, the current market cap can be justified. But don't rush. You also have to look at their earnings. A loss of 175 million, a loss of 100 million, a loss of 54 million, a loss of 64 million. So what do we see? They lower their losses. That's a plus. And more recently has increased a little. That's a minus. Now, if you also look at their balance sheet, they have 211 million in cash, right? And debt quite small, 51 million. As their losses are expected to be about 100 million, they can use this cash to cover their expenses. And that, I don't think is a problem, as long as they continue to grow and lower their losses. Now, Bitcoin mining, as they make money from Bitcoin, when they mine that cryptocurrency, if the price goes up, the other revenue from that segment is expected to increase. And as you probably know, they already have some data centers, where they have those equipment for Bitcoin mining. And they also announced that pivot to AI infrastructure, to offer AI infrastructure to different companies. If there is high demand, they can charge more money. Now, they also announced they want to transform their some facilities into data centers. And here is the thing that most people fail to understand. If you look at their press releases, they announce more convertible notes. What does it mean? Well, they raise money from the public market to fund those AI data centers and high performance computing. And then they rent the centers to different companies who want to take advantage of this infrastructure. Here is the thing. Be aware of this word, convertible notes. What does it mean? They take debt, but those debt holders can convert that debt into common stocks, common shares. And if you look at the number of shares over the last years, you see an increase from 210 million to 270 to 440, and more recently over 550 million shares outstanding. And this is quite bad for investors because you have dilution. You know what does it mean? Imagine this. You own a piece of land. 100% it's yours. Next day, you find out you no longer own 100 but 80%. Because when a company issues more shares, they bring in more shareholders, and you have to divide the value of that company with more people. And the more shares they issue, the less you get in value. Now, if the value of this land increases is higher than the increase in the number of shares, then you are with plus. You still make a profit. If it's minus, you lose money. And in the long term, if they're planning to invest more in data centers, their expenses will increase. You already see that in the first half of 2025. And someone has to cover those expenses, those costs. And guess who will pay for that? We, common retail investors like us. And of course, other people that invest in this company. And this is the biggest risk with this company. Dilution. And second, you also have to ask about the profitability of their AI data centers. Yes, they invest a lot of money at the beginning, upfront. So in data centers. But then, what will their margins look like in the future? Profits. Ask yourself. 10%, 5%, or with minus. Because now everybody invests in AI data centers to increase the supply. But over a longer period, after 5 years, who will profit from those AI data centers? Only the companies that have the software, not the infrastructure. The infrastructure is likely, they might make some profits at the beginning over the next 3 to 5 years, but then their margins are likely to go down. This is my current view on this. Because to imagine, what does it own a data center? Hardware, right? In a data center, you find a lot of hardware. And what's the lifespan of a hardware? Think about that. Well, 3 to 5 years. And then you have to replace that hardware, right? What does it mean? New costs, capex. And as they are forced to invest more money every 3 to 5 years, it's likely that their profits will be quite low, with minus. And sometimes even less than zero. If they break even, that would be great for Bitfarms. But if they don't, and they have higher losses, they will continue to issue more shares, raise money from the public market, from us, and fund their expenses. And you have the risk of dilution. That's why Bitfarms is not a great investment, in my view. And to open the box, show you the answer here, no, in my view, is not a great investment. Now, if you want to speculate, get in this AI boom market, yes, at the beginning you might have some ups and downs, but over a longer period is unlikely to deliver a great performance. To have a return, over 20% a year. By the way, on my portfolio, if you go to my profile, please join and choose Title Investor, you have access to my portfolio. And my performance over the last 4 years has been over 30% a year. This is a real performance. And my companies, I recently invested in a new company, which is quite cheap, and they are expected to grow more in the future. And on top of this, you also get access to an investing course, how to take advantage of those great companies that can deliver you higher returns. Other in-depth analysis, if you have a request for a certain company, I'll make a new video only for you. And bonus, you also get access to the previous levels, Spartan and Gladiator. So if you want to stop fooling around with companies that don't deliver value, join my membership and you'll have higher and higher returns. That's it for this video.